Wake up, motherfucker.
Yo, what's up? What's up? It's 7/7. All right, July 7th. Let's go. Let's get to it. So I got some stocks to think about. Let's see. So it's about like what? How many days? How many trading days have we had this quarter? Let's see. One, two, three, four. 4 trading days. All right. 4 trading days. Okay, that's good enough. We should be able to know what's going on, right? So let's get to this. All right, So I'm gonna talk about Axon here. Axon. Haven't talked about this in a long time. Axon, the drone company, body cam company, AI police enforcement, whatever, security. Who knows what else do they do? Probably some kind of defense contract, I'm sure, as well. So let's look at this. All right, let's see. So I recommended this one around the same time as Palantir, I believe. So 2024, right? 2024. So must have been when it was the summer of 2024, just before this earnings in August. So 279 was probably when I said, yeah, go for it. And it's been moving up to about like what, 800? Okay, that was the top. That was the top there. All right. I probably was already starting to sell by the time it got to here, the 600 somethings. Yeah. And it went a little bit further to 800. All right. After that, it went down. So this was during the 5 move. Let's see. So April 2025, this was the last push up after the tariffs. Okay. This happened before earnings. Not really sure what happened there. I wasn't paying attention anymore. Not too much. Okay, and then I was like, all right, so it's gonna start making a range. Okay, so I started noticing that this thing has been doing well this quarter, right? So we've only been 5 days into this quarter. So towards the end of last quarter, it moved up 28%. I didn't check the news. I don't know what's going on with this. Don't really care, right? As you can see, like I just look at charts. I don't really care too much about news. But since it looks like we've made this range, okay, we've completed this up, down, up, down. Now it's back up. Okay. Now it's time to pay attention again because if you look at the weekly here, look at the MACD, it's starting to move up rapidly. All right. So this little area here, this little bottom we made here looks very strong. A lot of green bars are starting to show up, right? Compare that to the past. Look at the past. More red bars coming through here. One final green bar on this earnings gave it right back up into Iran, into April. Then it's following the market up, and now we're popping above this. So are we ready to expand? Are we ready to expand higher on this stock? Well, if you look here, things are looking a lot better, right? Look at the red DI here. It's going down. Green DI is starting to improve. All right. You can notice that with the large amounts of green bars coming in now on the weekly. So this is a weekly chart. All right. So we see improvement, very good improvement above the moving averages on the weekly. Okay. So now take this away. What does it look like on the monthly? On the monthly, we're hitting from below this 18 monthly moving average. All right. So we should see some trouble. We should see some slowdown. We should see something like this, right? Or maybe it will just have to revisit and continue on this range. I'm not sure right now, but it is a new quarter. So when you see a good change in character at the end of the previous quarter going into the new quarter, maybe people are thinking this is the one to bet for the rest of the year into next year, right? Are we ready to continue on? Are we ready to do that? I don't know. So back on the list. Back on the list. This is something that's going back on the list. How about Palantir? Palantir. Now, there's a reason why I mentioned Axon and Palantir right now, because these are over the past 5 days, these are the best performing stocks in the S&P 500. Okay, right now, Palantir and Axon. So the two stocks I picked in 2024 are coming back in flavor during the turn of the quarter. So does this mean this is it? Are we done? Was that the bottom? Okay, that's what you're wondering, right? So this has been boring for how many months now? Let's say you got bored over here in July 2025, right? So it's been a year. It's been a year for this. It's getting boring. So now it's getting exciting again. So let's see, right? Looks like we're stopped here. That's what I expected. That's what I expected. It's gonna do this, I think. So okay. All right, that's it. So if you traded Palantir from the bottom when I said to go in for a trade 2 weeks ago, then you're probably like, oh, that's good enough. This was good enough, right? I would think it's good enough for a short-term trade. This is like what, 30% about? Yeah. At the high of this morning, it was 30%. This was actually green when semiconductors was down from Samsung this morning. And I did warn yesterday, right? I said, like, if you guys are actually in semiconductors or AI and you bought at the highs, I'm guessing you better get out because Samsung is going to report earnings. So Samsung reported earnings. It made 1,800% in profit compared to last quarter or something. Or was it 18,000? It was either 18,000, something ridiculous. They made a ton of money off of memory last quarter. I guess, yeah, it's last quarter. If they report this time, it's last quarter. But the market still sold off because, is it the top? Did we hit the peak of how much money you can make on memory? So that scared a lot of memory stocks, and then the rest of the semiconductors went down, and a lot of AI went down. Actually, a REIT went down. There was a real estate investment trust that had to do with data centers. I saw go down. What was it? Iron Mountain. Iron Mountain went down. Okay, IRM. See this? Yeah. So it's been going down, right? It's been selling off this quarter. So you see that this thing follows the semiconductor story, the AI story, whatever you want to say story. Look at that. Okay. So since the end of last quarter going into this quarter, people have been moving money somewhere else, right? You see it's going back to Palantir. You see it's going to Axon. Let's see, where else is it going? You see it's going to the biotechs. Biotechs are continuing up. And then what else is going up? What else was my favorite? Like, I guess cybersecurity, but cybersecurity was already up. So it was already up, and it tapped out sometime around June, and I guess they went back into it. Okay, no idea what where the money is. All I can do is read the charts. I don't have any inside flow knowledge. All right, you got to pay more money for that. And even if you did pay a lot of money, I'm sure they don't want to give you everything. They want to keep that a secret. How many retail investors are buying this and that? How many big investment banks are going over here? Right? How many portfolio managers, how many pension funds are doing this and that? All that information, if you have it, you're not going to give it away. All we can do is look at the charts. What does the chart tell us right now after 5 days into the quarter? Semiconductors are not strong anymore so far, and they're trying to move somewhere else. And we've seen a few of these sectors, right? We've seen them. Healthcare. And today, the big winner was banks. Banks were a big winner. So today, XLV was up 1.53%. XLF, banks, insurance companies, seem to be the top performer these last few days. Okay. That's what's been going on. So what's this? Why is it doing this? And banks will report earnings first, just before ASML. So sometime next week, we will start seeing some bank earnings. All right. That's about it. Okay, let me read your chats. Blah, 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 blah. Let's see. I found out the thumbnail. Brian Johnson, Shkreli both look cooked in her. Yeah, I mean they look pale. I guess I don't know. I mean Shkreli's Albanian, right? So he's got that. He got that Slav genetics. So kind of got the Vlad the Impaler type of thing going on. You know, they kind of get pale. Alex Carp. Yeah. Yep. Alex Carp. Yep. Alex Carp. He's gonna make it, I think. Not to be confused with Kev Dog. Okay, think the tech sector hut and me. Um, it's really gonna depend on the earnings right now. So, like I said yesterday, I'm like, it's going sideways. Everything's gonna go sideways. Nobody wants to make a move either way. I think if it does drop before any real earnings comes out, I would probably buy it for a trade at least, at the very least, because it will take a while before you get to Intel earnings, right? Google earnings, Microsoft earnings. Like you're just gonna get like the small fry earnings first. You're gonna get Air. Air's gonna report earnings. So today it was announced that Air will report earnings on the 14th. So I'll read that later on. So Air is the first one, like I thought. So TradingView estimated it to be like the 21st or something like that. And I knew it's like, no, Air is going to be the first one out the door. It's always the first one. So it's next week on the 14th. All right. This will be the first one out the door. So it'll be here Tuesday. And then after that will be ASML on Wednesday and then TSMC on Thursday. So those are the only semiconductor type stocks you will see next week. Okay. Usually TSMC is well known. TSMC reports results every month. Every month they report something. So it's very rare for TSMC to have a surprise earnings, either up or down. So TSMC is just going to be like, yeah, we know what you're going to say. We know what you're going to say. By the time it reports its earnings, it's just gonna be like whatever, and then go back down, or it'll just go down and whatever, and come back up. It's just gonna go sideways. It's already been going sideways. We're just gonna stay going sideways. So it's not really that important. ASML will be more interesting because it depends on what they say more than what itself as a company does, right? ASML is a critical company for the semiconductor industry. It could have a terrible earnings, but it doesn't matter, right? So the company itself could go down like 6%, but that might not matter. What matters is what they say about the future. What is the future? How many companies want to build more fabs? So that's important for the growth story, right? So the Canadian, I keep playing those things because it's for a reason. It's for you to understand that the semiconductors is a broad set of companies. So a lot of people, they just buy SMH ETF, right? You know the reason why a lot of retail people just buy SMH? They buy SMH because it doesn't have a lot of influence by ASML, CLAC, what else? Um, Applied Digital Materials. I don't know. There's a whole bunch of them that they don't want. People that buy SMH, they just want everything to be overweighted with AMD and Nvidia. They like the sexy chip stocks. The boring equipment stocks they don't like to see. So that's why they don't like to use SOXX. But I use SOXX because it's the truth. SOXX is the truth of the matter. Like, so if everything in your ecosystem, in your semiconductor ecosystem works well, then the AI story continues. If something in the chain breaks, if somebody says something different in the chain, then the AI bubble pops because it's all about belief. People believe that the future will have many more data centers because there is a future amount of customers that demand AI, right? That's your story right now. If ASML comes out and says like, "Oh, well, the future orders look bad. We're not getting as many orders in 2029 and 2030." Look, all the stuff you're getting now in price is because people are pricing everything as if it was 2030. Okay? That's how the market works. The market looks at the future, right? It just looks at the future. Everything you're paying for now is because that's what it's going to be like in 2030. If 2030 disappears, the story disappears, then guess what? Everything goes back to normal. And we go back to where we were in 2019. And that's when you get those epic crashes, right? That's what Michael Burry wants to see. Michael Burry wants to see this thing just puke all the way back to 2019 prices. Okay, we have to go all the way back to there, and that's what the worry is. Okay, so let's look at the SOXX. Look at how we are right now. We're just flying up here, right? So where's 2019? Where were we back in 2019? We were over here, $88, whatever. Okay. So if the AI story disappears completely, yeah, we're just going back there as if AI never was around, right? And that means we're going back to this level. So let's say we drop there, like what? 85%. There you go. 85%. Bye-bye. Bye-bye. All that wealth disappears. All that money evaporates. And it's all illusion anyway. What is money? What does money mean, right? It's whatever the Federal Reserve prints. And then the Federal Reserve prints you money, and you take that money and go somewhere else. And then someone in a stock market decides, oh, AMD is worth $200 just because I think it's worth $200. And if you agree that it's worth $200, you sell your shares to that guy for $200. That guy in turn sells another share to somebody else, right, for $250, and on we go, and the price goes up. So where did that money come from? That money isn't physically made, okay? It's just a belief. You just believe that something is worth something. So that's the beauty of the bubble, is that you can make a lot of quote unquote money really quickly because it's made out of thin air. And also the problem is that, like, if you don't get out before the bubble pops, then you can quickly just lose it all, right? Of course, like, I don't think it's just going to drop in one way 85% or whatever, like I said, but you have to worry that if we do have a bear market, it's just gonna be wild here. So let me just give you an image. Let me give you this image. So this is what I tweeted, right? I showed you that yesterday. So I think I showed it in the morning stream yesterday. Yeah. Okay, here. So this is the DeMark. All right, here. Okay, the DeMark thing here. All right. So it took many years before this bubble popped completely. It wasn't a one-way street. And the tweet that guy made was that every time you had a bear market rally, you went up like 20%, 30%, something like that. And it was very vicious. So it took a while before the ball went all the way down. And that's why we need these DeMark indicators for this, because you can see, like, it times it fairly well, right? You got the 5, the A, the B, the C, and then you have these 13 intervening 9s and 13s coming through, which could tell you, oh, this is a temporary bottom, this is a temporary bottom, this is a temporary bottom, where you could trade. So if you start learning how to trade before this happens, I think a lot of you guys are just so used to having V-shaped bottoms. Trump has spoiled you guys, completely spoiled you guys. Every time we have a bottom, it goes up in one go. You don't actually have like multiple drops and pops and drops and pops. The only time you kind of had that was during 2022, right? 2022, when you had the market dump on interest rate hikes and the Ukraine war. So if you're holding stocks, like, maybe sell before it drops more. I mean, it depends on when you bought it, right? If you bought it at the top of the range, Yeah, that's not good. You should have been long gone. If you bought it at the bottom, you kind of don't care. Maybe. I mean, it depends, right, on your trading strategy or if you're more of a short-term person versus a long-term person. Yeah, not just a small correction, but most likely a longer-term sell-off. Well, the only way you're gonna know is when you have earnings. That's the only way. And then so you either have to decide now, right, at the turn of the quarter, when we change from quarter 2 to quarter 3, do you risk earnings or not? I personally don't risk earnings. It's like if you don't get to my target before earnings starts again, I'm already gone. Like that's my strategy. That's my thing. Unless it's a long-term hold, right? Unless it's something I held for a long time that I kind of don't care. Like Palantir that I held like since 2022, 23 at the bottom, around the bottom. It's something I held a long time and the chart already looks good where I'm just like, okay, well, I guess I have to suffer through earnings each time. Every quarter, I got to suffer through earnings, and I have to decide right then and there is like, am I a long term person for this stock or not? Right? If I'm just coming in to trade, I'm trying to avoid the earnings. That's me. That's just me. Some people, they love earnings. They love the damn earnings. They want to play only because of earnings. Then you're in a different mindset, right? And you're probably most likely playing options because options are the only way to limit like, okay, this is how much I'm going to lose if I'm wrong, right? That's the only way. When you buy shares or you short the shares, you're really playing with fire for earnings because you you can't predict what it's gonna do, right? Right when the earnings happens. Like it's like yeah, you're good luck. I don't know how you do that. I don't know how people actually did that without options. Like people actually held shares. Like you got to be a Warren Buffett style person. Like you always just hold a company because you understand the company to the point where you're willing to suffer through earnings over many years. That's the only possible way, right? Like and the only way you're going to be thinking that is if you bought at the final dips, the very good dips, okay? We haven't even gotten there yet. Um the last big dip was 2007, 2008, right? And then before that was the 2000 dip that we're looking at right in front of your face right here. This is the 2000s. If you bought at that dip, let's say this is the Nasdaq Composite. Okay, this is not Nasdaq 100. If you bought at the real dip after the dot-com bubble, you bought close to about 1,000 something dollars, okay, for the Nasdaq Composite. Um I don't know if there was an ETF for the Nasdaq Composite. I don't think so. But let's say you could buy this as a share. Well, okay, I bought about $1,200 for this. In the coming year, it went up to 2,100, 2,200. Not bad, right? And then from then on, we just kept going sideways to up because that was the real bottom. If you bought at those type of dips, why do you care about earnings at that point, right? You have something that you can hold for a long ass time because you bought at a true market bottom. If you're buying something as it's going up, well, that's a different story. If you buy something as it's heading towards the top, that's even another story. If you're buying as if it was like a trade versus a swing trade, a day trade versus a maybe something you just hold for a year. I don't even know. Like, do people even consider something held a year even long term? Some people don't. Some people don't. They think you're still trading. Like you have to hold something for like 5 years or more, maybe. I don't know. It's kind of like a personal matter, an opinion, really. So yeah, that's what I see right now. With how things are we gonna enter to this last push up, and then we're just gonna crash like this? That's what we have to worry about, right? When is this illusion or delusion or whatever gonna pop? So once I play some more of that Canadian dude's videos, like you can see more of his like AI assumptions. Okay, so I'm gonna try to play some of that today. So if I don't get it to you this stream, I'll do another one tonight, and we try to get through it because like he talks pretty slow, so I kind of want to get through it. All right. Oh man, let's see. Let's see. All right. Okay, let's see this. All right. Where are we? Where are we here? Okay. I guess I drew some. Yeah. So I guess these little dash lines was what I thought it was going to do. I said like down, down, up, 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 down. Okay, it's following this. So I guess I predicted pretty well. Looks like I predicted pretty well. That's not bad. So it looks like this. Okay, so that was my prediction. We get to the bottom of this level. Yep. We finally here. I had a feeling we had to retest this 531. All right, good. So there you go. See? There you are. That's predicted. That's predicted. Okay. Uh-huh. What else? Nothing. Let's see. So this will be where TSMC reports, right? Okay. TSMC will report somewhere around here. Okay. So by the time Thursday morning hits, okay, we should know. So somewhere around here, that's when we'll know. If this thing pushes up into 616, probably that'll be your next chance to get out right there. So there you are, right here, right before the rest of the earnings 2 weeks later will occur. Okay. All right. So that's it. You're in a range, guys. You're in a range. Suffer. Suffer. I mean, I did warn you guys. When you have this type of complex move like this, it's not going to be an easy street up. Nope, nope, nope. Once I saw this, I'm like, yeah, you're going sideways. It's no way you're gonna go anywhere. So yeah, you're gonna have to suffer through it. Either you say like, I don't want to play this, I'm out and go somewhere else, or you gotta go through it. And there were other opportunities out there, like let's see. QLYS I mentioned 2 weeks ago. There you go. This was cybersecurity. It just went right through. It didn't even want to make a range, right? So right when we had this turn right there, we just broke out completely. I don't know. Was there news? I don't know. Whatever it was. So it looks like we could see like this is the first time we have a big red candle. So we're done here, right? We're done here. We're probably done here. I think like if I start looking at the other ones, CrowdStrike and others, yeah, we're probably done. This was a very large green candle yesterday at the morning, and then now it does this. Yeah, we're done. We're going sideways now. So you could have held out somewhere else. Palantir was another one to recommend, right? There you go. We already know that. We're probably done. This one was disappointing, right? Bitcoin, it was like, dude, bro, MSTR, at least get to 108. Nope, nothing there. So again, yeah, nothing. So that's it. That's it. We're done. We have to wait for earnings. We gotta wait for earnings. So you gotta wait for next week. Nothing to do right now. If you wanted to trade, you had to get in like last before the quarter was over And then once we got it, we're done with that. mRNA, probably same thing, right? I'm guessing we're going to have to go sideways. We already hit $80. Yep. Yeah, we already hit $80. We already went over. You see these red candles coming in? Yeah. Most likely we're probably going to do this. Or worst case, we're going down back here and we're making a larger range, right? So what else? Hymns. Yeah, hymns. I warned that this was probably it. Yeah, okay. Yeah. All right, we are done. So let's say I bought hymns at $20 or less. Do I care about this? Probably not. If I bought up here, yeah, I want to get out as quickly as possible before the next earnings comes around, because earnings season is starting, and that's what it is. So, yeah, like I said, everything is about earnings. Everything is about the quarter. Like, if you want to trade, for me, it's always between the earnings dates, right? It's between the earnings dates. It's in between like the quarter changing. What else can we do, right? Except that I can't like predict what people want to expect from earnings. I can't predict what the earnings results will actually be. I can't predict anything like that. And it's all dependent on price too. If let's say let's look at air, right? Air. If I was over here, right? I bought over here. that is ridiculous, right? Compared to someone who bought over here, right? Now you have two people with different mindsets. One guy has lost pretty much nearly 50%. One guy used to have 300 or 200%, right? 200% or something like that, right? let me check my math. That's 200, right? 200. Yeah, 200, 300. Okay. Yeah. So, and now we lost some of that gain and we're over here. Earnings is next week. What is the mentality of this person right now? What is the mentality of this person? If this price was over here before earnings, it's a different reaction than over here. Let's say this thing drops over here. Would you buy that before earnings? Let's say into next week, it could get closer and closer to $40 or $50. Would you buy it before earnings? Right? You're probably thinking like, well, I'm more tempted to buy it. Maybe, you know? What about the guy over here? He's probably thinking like, oh shit. I gotta sell now before I lose any more of my profit. The guy over here is like, like maybe I don't know what this guy's thinking. This guy either already sold over here, or he's just like deluding himself to thinking like, well, maybe the earnings will be good and I can get back to break even and get out. Right? This is a wild stock to hold. Um, so the only way you could comfortably hold this thing is if you entered at good places. And when I was watching this stock, right, during the 2021 pump up here, I was like, yeah, I see a place where you can buy it. The places you can buy it is down here, right? So this was already set as a bottom. And we touched that bottom in April. So either you got it at $8 or you had to wait until it got above this range, right? It had to break out, it had to prove itself here at 25. So either you got it at 8, maybe you got it at 25 because that was the last time we had difficulty holding it. We went up and went down. We had some initial high over here. And so the next place to buy it would be like 43. 43. So buying it at 43 and 50 before earnings probably is very tempting for somebody that wants to gamble right now. All right. So you would probably want it to be over there. So the psychology is wildly different for somebody that bought here versus here. And now there will be a new guy that wants to buy here, I'm guessing. So if semiconductors wants to go down into next week, just before air earnings on Tuesday, I would be looking at that 43. What does it do at 43? After it gets earnings, it can pump up a lot because earnings on this thing is not is not boring most of the time. This thing can go up and down 30, 50%, no problem on earnings. Yep. So there you are, right there. So I would be watching this level. If you're not in this thing, yeah, I would be trying to see if I could get in at 40 something. Not sure if you're willing to pay the earnings tax or not. If you want to get in before earnings or wait for after earnings. If you wait for after earnings, maybe it's too late, right? Because then it will just roll right back up to 70 to 100. Or it was a good move and you can rebuy it at 25. What if that was the earnings result and expectation and and response? Yeah. So what price will it be before earnings will heavily dictate how it moves after earnings. And Trump knows it very well. Trump gave you this dip before the second quarter, before all the semiconductors moved up. Like I said, Scott Bessent is not a dummy. There's a reason why the Iran war had a timeline, a time frame. Everything was set up for that reason. Trump wants the stock market to go up. That's his goal. That's always been his goal. That's what he set out to do, right? That's one of his number one campaign promises, is that he wants the stock market to go up. What's the best way for it to go up? The best way for it to go up is to reduce people's expectations before the earnings. Okay? So if this thing keeps going down in $40, people get more bearish over here. People are thinking like, oh, maybe earnings won't be good. Oh man, what happened? And then all air needs to do is report earnings that are better than expectations. Okay? It just has to be better than what's expected. It doesn't have to be great earnings. It just has to be better than what most people think earnings will be. If the price was over here before earnings, then the expectations are very high. You need to have really good results for it to go higher. But you don't need to have a lot of good results for it to go higher if the price is over here. By the time earnings happens and then the price starts moving up, and then other earnings comes out, guess what? It just goes up again, just like we had here. What's the difference really between before Iran and after Iran? Not much. Not much. All it did was make the market go down and make people bearish. Everybody ran into oil stocks. And then once all the AI happened, everybody ran back into AI and it pumped even higher. So you get the meaning here. It's all about the expectation. Expectations matter a lot in this game. It's as much of an importance or more than the actual result itself. What is your mindset before this? What is the mindset of the investor? What's the mood of the investor? It's all psychology. It's all about psychology, okay? So, yeah, I already scribbled a lot here. Just scribbled, blah, blah, blah. Anyway. Okay, hopefully you got that. Ugh. Let me see. What else is on the list? I had a lot of other crap to cover. Okay, let me get through some of these. And then I'll have to get to some article reading here. Okay. I think before I move on, I want to talk about Band. Band is really looking good. Look at that. So I was thinking this might happen, right? I was like, this is going to make a new range around here. Okay, so let me clean this up. Get rid of this. Get rid of this. Get rid of this. Okay. So this will be the top. This will be the bottom of this range. So now it's up here. It's up 11%. What's the news? Was there any news on this stock today? Six days ago. Nope. Well, TradingView doesn't give me anything. I don't know. Maybe you guys will have to go Google this and see if there was any news. Maybe go on Twitter. But for some reason, it was up 11%. Did it need to have a reason for it to go up? I don't know. Maybe not. Maybe not. Maybe it just wanted to test this range here, this resistance here. This is important. Okay. So what are we doing? What are we doing here? Are we going to go retest 61 before moving up? Or is this going to be some type of upper level here? So I see this green bar over here. This green bar back in June 2nd. Okay, so this might be something where we're going to have a range over here instead, huh? Could we potentially have that? I don't know. We'll have to see, right? But yeah, this chart looks a lot better over time. It's definitely looking a lot better over time. This whole structure here might be something good. I mean, one other thing to look at. Let me see. Let me look at the daily. Does the daily showed anything? Did the daily have anything interesting? Let me look at the volume. So for this stock, after May or April, after this earnings over here, we had a lot more average volume compared to the past. So look at the daily volume under these conditions here. We had May 11th. We had higher than this new average of volume. So I would say like, okay, May 11th here. Then the next one was May 15th here. And then we had May 29th and June 1st here and here. Then we had June 4th and June 5th here and here. So this was the top, right? This pretty much set the stage for the top. So you had a lot of volume here. But right after that, red bar, red bar, red bar. So that was over. That set you the tone right there, because you had a lot of people come in to play, and then it gave up everything to go back to the bottom, right back to where we were in May 29th. So that set you this level here. So wherever $60 is important. So $60 is important. Now, if we go look back at May 11th and May 15th, these two bars, we see this level and this level was important, right? So I think that's what set the tone for this bottom over here. So whatever happened between May 15th and May 11th, between the prices of $48 and $55, this is probably what caused this to happen, because you see here the volume went up for these two bars around this level, right? 1, 2, 3. So this whole area here, 1, 2, 3, 4, I guess 4 bars. This red. Okay, so these levels before we started moving back up. So we know this area between 48 and 55, that's a lower level. And we have an upper level somewhere around $60. Somewhere around $60 people like to play with. And this volume today, up 11% over here, it sets the stage. So either this just gives up everything and goes back down, or this is the beginning of a test to move up higher. Okay, so if you're interested in this stock, yeah, I would probably say like, okay, now I'm really interested. Now I'm really going to be paying attention to what it does between $66 and $60. So this bar now is now the keystone bar for what will happen later. Either we just give up all that work and go down, or this is a preparation for the next move. And I guess earnings is July 29th. We have a lot of trading days before July 29th. Okay. We got a lot of trading days here. So what are you going to do? This is only like a first few days of July for trading, and we got until July 29th. So, are you going to trade this? Cuz this thing could just keep on melting up. I don't know. People are getting out of semiconductors. Where are they going to go? Maybe they'll just keep chasing this guy. All right, we could run right up into 75 or higher before earnings for this one. So, I don't know what the news was. You'll have to check. PNF targets band 114 112. Yeah. It could just go right there right now. There's no earnings until the 29th. You could definitely do it. Definitely do it. Okay, launch agentic AI. Man, does everybody just put AI in anything and it will just go up? Is it that easy? Like, bro, anybody can say, "Oh, I got agentic AI. I got this AI. I got that AI." Seriously? Seriously? It's like half the stuff I see is AI related now. Like everybody wants to just play this game. Anyhow, doesn't matter. But that's significant volume. Okay, that's significant volume. So it's probably gonna break away right there. Okay, that's it. That's all I wanted to mention. I think that was the only stock I thought was interesting today. I said like, oh, what is it this one doing? So throughout the day, it was just it kept creeping up. It kept creeping up. And I was like, why is this one of the only stocks that seems to be doing this today? And it's doing it at a important level too. Right? That's an important level. Okay. All right, that's it. Okay, let me get to these dumb stuff. Let's read something. Okay, let me read this. All right. Okay, got that. Okay, and I have this one. All right, I want to read these two. I want to read these two articles thing for you. All right. Everything's agentic AI. I'm agentic AI. La 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 AI. Fucking annoying. Who cares? Who cares? All right. So here, Air test systems to announce fiscal 2026 fourth quarter and full year financial results on July 14th. So Air Test Systems, a leading provider of test and burn-in solutions for semiconductor devices used in artificial intelligence. Okay, see, let me remind you. Back in the day, Air Test Systems was a critical component for testing exotic semiconductor devices. Exotic meaning they weren't using silicon, they were using something like gallium arsenide or something else. I forgot what the other thing was. Let me look it up. Let me look it up real quick here. So Tesla. So it was very tied to Tesla, okay, for a while there. So if you look at Tesla stock and Air Test Systems, they kind of moved in lockstep. So Tesla, silicon carbide. Let me see if it's true. Silicon carbide, I think, right? Yeah, silicon carbide. So Air Test Systems was critical to 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 work with silicon carbide. And silicon carbide is a special semiconductor material used in the inverters, okay, that power Tesla and a lot of other EV cars. Okay, inverters meaning they convert DC power to AC power. Okay, so direct current to alternating current. If you don't know what that is, you can go look up the real Tesla. All right. Okay, the Serbian or Croatian Tesla. Look up the Tesla, the man, Tesla. All right, go look up Wikipedia, look up alternating current. All right, if there's any electrician in the audience, you can explain it to them. But this was very key to the early electric vehicles. And, a couple years ago, I think Elon Musk was like, we don't really need silicon carbide anymore. And then that crashed the stock. So you could see the stock going sideways after that. But for the most part, it's like it follows Tesla. Okay. But now you see it's little press releases here. It's like artificial intelligence, silicon photonics. So like Sienna, like we talked about yesterday, AAOI, coherent, Lumentum, data center, and automotive and industrial applications. So you see, automotive and industrial applications is now the last thing they mentioned. They want you to remember that artificial intelligence, silicon photonics, and data centers are more important because those are the things that go up in growth, right? How many cars do you think people need nowadays, right? It's not going to grow anywhere. Is like all over the place now. You're going to need like California and other states like that to ban sale of internal combustion engines to make more demand for EV. So automotive is now at the bottom along with industrial applications. Okay. So the only way this stock is going to grow is if these three things keep going up. So today announced that it will report financial results for its fiscal 2026 fourth quarter and full year ended in May 29, 2026 on Tuesday, July 14th. So this one, okay, 5:00 p.m. Eastern time, 2 p.m. my time. So that's when you'll know. So after the close on Tuesday. And then we'll go to Wednesday. Wednesday morning, we'll have ASML earnings. So these two stocks, AEHR, and ASML, will be the first ones out of the gate next week for semiconductors before TSMC reports in Taiwan time Thursday early morning. Okay. So around midnight your time, Eastern, you'll have TSMC already report earnings. So you should see right away before the market goes into pre-market what happens here. All right, the next thing I want to talk about, measurement tweaks will make inflation data look better. So this is what I warned you about with Kevin Warsh. Kevin Warsh wants to change how inflation is looked at. So this might be the way Kevin can like avoid raising interest rates, okay? Changes to the methodology underneath the Federal Reserve's go-to inflation measure are on track to make the numbers look a couple of ticks better later this year. Why it matters. The changes are entirely defensible on technical grounds and should make the personal consumption expenditures price index, so that's the PCE price index, better able to mirror overall price dynamics over time. But coming at a fraught moment when the independence of statistical agencies has been attacked and the Fed has overshot its inflation target for half a decade. The optics aren't great. The optics aren't great. The Bureau of Economic Analysis, which calculates the PCE inflation measure, announced late last month the methodological changes to how prices change are calculated in 3 subcategories. It will change the calculation of prices for portfolio management and investment advice services, computer software and accessories, and legal services. Okay, so it's saying that like the inflation from uh what is this? So Charles Schwab or Robinhood? Like what are these portfolio management and investment advice services? Computer software, all right, accessories, and legal services. The changes will be included in data revisions released September 30th. So that will be the earliest time we'll start seeing these changes, huh? The end of September. Okay, maybe that's important to know. Analysts have been modeling how the changes will affect inflation readings, with the consensus view that they will reduce core PCE inflation by about 0.2 percentage points. Core PCE inflation was 3.4% for the 12 months ended in May and has been above the Fed's 2% target every month since March 2021. So that's not much. I mean, I don't know. Are you going to reduce everything by like about like 0.2% or 0.5%? Um, and you're still over like to 3.4. You're not. Oh, okay, whatever. There are some good technical reasons behind the changes. The current portfolio management price measure, for example, tends to simply reflect the recent performance of the stock market rather than some measure of the underlying prices and inflation trends. If a person pays a fixed 1% portfolio management fee, so yeah, you should check your 401k because I think they I don't know if they take away 1%, but they definitely take like at least 0.1 to 0.2%. Okay. If you're using those stupid little funds from mutual funds, right? For example, and their portfolio rises 20%, it counts as a 20% rise in prices for asset management services. Yeah, okay, that makes sense. What ought to be recorded as an increased quantity of services consumed is instead recorded as increased prices. Yeah, okay, yeah, I get it. I get it. That makes sense. Mirren, along with Fed staff economists Alessandro Barbarino and Anthony M. Dierks, okay, laid out flaws in the measurement of computer software and accessories in a paper published in May. Among the issues in play are how portable memory devices, video games, and other tech products are counted. Grand Theft Auto 6 may yet have a chance to move the treasury curve. Man, are you joking? Okay, well, I'm not going to read that paper to figure out what the hell's going on here. It's hard to separate the newest technical changes from the backdrop against which they occur. Less than a year ago, President Trump fired the commissioner of the Bureau of Labor Statistics after a weak jobs report. Oh, I didn't know that. Okay. And his original nominee to replace her was widely criticized as underqualified. Okay, whatever. Can we continue on here? Given the growing mistrust around official data, we urge the BEA to act with more transparency around timing, weights, and historical revisions. Vikas Patel, with Employ America, a liberal think tank, wrote. The statistics authorities also should extend that scrutiny to categories left untouched by this update, but subject to the same measurement challenges. Oh man. All right. Well, if you're going through all this work to get you 0.2% improvement, I don't know what to say. I really don't know what to say. All right. I don't think that's a big deal. I don't think that's really going to affect things, but maybe it's because this portfolio management and investment advice services, maybe that's really the important key problem here. Is because let's say Kevin Warsh knows that AI will grow the stock market a lot into next year. If this doesn't get changed, then each time the stock market goes up like another 50, 60%, guess what? That inflation number just looks like it's going nowhere, right? Because every time the stock market goes up, they count it as inflation through this means. But in a way, the stock market going up is inflation because, like, when people see their 401k go up, they're psychologically primed to spend more, even though they don't have access to the money. Like, a lot of inflation is because of psychology. Okay. If people feel they're wealthy, they spend more. That's just it. They will just do that. Whether or not they have access to that 401k, they don't care. They just go like, "Whoa, look, my Tesla stock is up whatever blah blah percent, or my my bonds are doing this now, blah blah." And then they'll just think like they have that money and they'll just spend with their credit cards more recklessly because they think eventually they can, you know, pay back down the line. So, yeah, it's true. I don't know, in a way that you shouldn't count it, but in another sense, psychologically, it does have a big effect on people's mindset for how they spend, which affects inflation. So, interesting. Maybe that's a tell. That's a tell that Kevin Warsh is really considering to pump the markets next year, right? We've already said Alan Greenspan is his role model, and Alan Greenspan was the architect of the 1990s tech bubble. Okay, we have to invest now, and that's kind of the side effect of the tech bubble in the 90s. It's like we know these companies are not making money, but a good chunk of them will eventually make money. So it's better to spend now to let them grow so that they can be dominant later, right? How long did it take Google to be profitable? It took Google about a few years to be profitable. How long did it take Amazon to be profitable? It took Amazon like over a decade to be profitable. So you could go Google this yourself. Go on Google, go to your favorite AI, go look at, like, type in what were the 90s tech bubble companies that still survived, and of those that still survived, how long did it take for them to be profitable? I think only Google was the one that became profitable quickly. Everybody else took a long time to be profitable. Amazon is probably the number one poster child for this. Amazon took forever to be profitable, and yet people kept buying that stock because it's like Amazon's everywhere. Amazon controls everything. So it didn't matter if they weren't profitable. Um so as long as somebody is helping them, right? And it doesn't have to be a conspiracy. It doesn't have to be conspiracy that the government helped Amazon. You guys helped Amazon in a lot of ways, right? Everybody wanted, like, to buy books from Amazon because they were a cheaper way to buy books. And then from there on, it became worse and worse from that moment because they infected everything else. They got into Whole Foods, they got into other marketplaces, right, to compete with eBay. They just went everywhere up to the point where they just were also a tech company by their own rights. People just look at it like a marketplace, but it's pretty much a tech company. Okay. Every time an Amazon Web Services cluster goes down, like half the internet dies. That's how crazy it is now. So yeah, I think Kevin Warsh is that type of person. Let's help these companies, even though they're not profitable, grow. The faster they grow, the more likely some of them will survive into the next cycle. That's kind of what I'm thinking here, right? because it's a competition against China and any other country that wants to dominate AI. Whether you believe in AI or not, the thing is that they're treating them like nukes. Whoever has the best nuke is going to win the war for the future. So, if the people on top believe that, then you better believe it. Okay, do. Oh man, what else I gotta do? Did I get through this? Yeah. Okay, I wanted to read some Samsung stuff, right? Did I put that Samsung crap in here? Okay, so I did. All right, good. All right, let me read that crap Samsung stuff. Okay, two articles. Let's go. So let's see. This thing should tell me if it's 18,000 or 1,800%. All right, let's see what this one says. Samsung's record profit fails to impress after AI chip rally. Okay, Samsung quarterly profit surged 19-fold. Okay, so that's 19x. So that's 18,000%. All right. So they made 18,000% more profit, but failed to impress investors used to eye-catching growth from suppliers of AI chips. Samsung shares slid 8.5% in Seoul on Tuesday, with investors having largely priced in chip makers' hefty profit margins due to a historic build-out of AI infrastructure worldwide. Korea's largest company posted preliminary operating income of 89.4 trillion won, $85 billion, in the last 3 months through June, beating projections by about 6%. Revenue more than doubled to 171 trillion won. Earnings by the world's largest memory maker are in the spotlight as investors seek to justify sky-high investments and valuations around AI. Global semiconductor shares jumped to record levels earlier this year. All right, blah, 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 blah. The figures, while extraordinary on an absolute basis, aren't that much better than what Wall Street was modeling for a stock sitting at the epicenter of the hottest sector in the whole market. So that's expectations versus reality. So every time the market pushes the stock price up, your expectations starts rising. And then by the time you get to the earnings, it's going to change how the earnings reaction will be, right? So if I make everything sound worse than what people expect, and then you have like a slightly better than worse earnings, it goes up. It's kind of like Netflix, right? Or some of those other trashy stocks. It's like the stock goes down, 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 but you get a bad earnings, but the earnings wasn't as bad as you expected, and it just pumps up. So I would tell you this. SOXX is at the bottom of the range right now. If we go down further into AIR and ASML next week, I probably would be thinking if I want to trade, I would go long because we're at the bottom of the range, right? Versus when we were at the top of the range 2 weeks ago. Okay? So you have a different mentality. Bottom of the range, top of the range. Bottom of the range, top of the range. The only way this thing gets sorted out is until we get to the big earnings, which is Google, Microsoft, Amazon, Apple. And it's going to take at least 2 more weeks to 3 weeks to get to there. Okay, we're just getting these little hints from these guys. SanDisk will be next week. I'm going to talk about SanDisk in a while. SanDisk is like, dude, this stock is insane. Okay, tech weakness resumes after Samsung misses lofty AI expectations. U.S. stock futures pointed to renewed weakness in technology shares after Samsung earnings failed to satisfy investors. Well, that's the news, right? That's the story they want to go with right now. Maybe it was just because like they ain't nobody wanting to buy anything from the NASDAQ 100 before earnings. And then you had SpaceX get on the NASDAQ 100 today, too. That might have something to do with it. So either SpaceX got in at the wrong time, Samsung made the NASDAQ go down, because the S&P only went down like 0.3 to 0.5% today. The NASDAQ went down 2%. So we're seeing a lot of difference between the NASDAQ 100 and the S&P 500 right now. So this was at 7:30 New York time. Futures fell about 1% for the NASDAQ 100. Look at the S&P 500, 0.2%. So you see a stark difference, right? And we've seen this for a while now, this quarter. The S&P 500 is ignoring the pain from the NASDAQ 100 so far, right? See? Yeah, you're talking about healthcare, though. That's healthcare. That's the biotechs. And those biotechs are not on the NASDAQ 100. Okay? NASDAQ 100 are the large cap heavyweights. So if you're talking about like Moderna or the other ones, Moderna is like the only large cap biotech I recommended. That's not on the NASDAQ 100, I don't think. That's not going to be included. NASDAQ 100 is Google, Nvidia, Microsoft, Oracle, on and on and on, Intel, AMD. Like what other ones you know about, right? Those haven't been doing well at all. You're talking about like the little boys, the little biotechs. Those are not NASDAQ 100. Those are NASDAQ Composite. NASDAQ Composite. So there you go, right? Those are not going to be part of that stuff. That's it. And the top performers in the S&P 500 so far, the 5 days, are Palantir and Axon. Something I recommended like 2 years ago are coming back into flavor. What does that tell me? Should I just go back to my old favorites? Is that what we're gonna do? So let me get this image here. Okay. So this is what's been happening in the past 5 days. Past 5 days. So the last 2 days of the previous quarter with the first several days of the new quarter. The top performer, 25.72% is Axon. Second up, 16.31% Palantir. Third up, 16.18% Workday. So that's a software company. Moderna, 14.69. That's biotech, pharmaceuticals. S&P Global, SPGI. So that's financials. Okay, a broker dealer, 14.5%. Ameriprise, I don't know what that is. Accenture, I forgot what that did. APD, Air Products, I don't know. Raymond James, I guess that's financial. Cognizant, Paycom Software, Payc, 13. Charles Schwab, another broker dealer. NASDAQ, broker dealer. EPOM Services. So, and CBOE, financial services again. So a lot of bank stocks have been doing well. So that's why I was like XLF, bank and broker dealer investment type services. Okay. So, okay. What's going on there? If you can see, like here, like let's see, industrials, cat is down 9%. Let's see, Micron 18.67. Nvidia's flat. Eli Lilly flat. Johnson Johnson 3.76. Okay. Meta 9.67. So there you go. I don't know. You could take a look at that yourself, but not the usual suspects, right? Not the usual suspects we've been considering. So there you go. It's like huh? What? I think you could tell like why the S&P 500 is kind of ignoring it. Like there's other things helping it up right now, which is good. That's what you want to see. That's exactly what you want to see. Like so if people think semiconductors are overvalued, at least it's not crashing the stock market. At least some of that money is going somewhere else. Okay? So that's what you want to see. You don't want to see the market just puke just because semiconductors want to puke. If semiconductors want to puke and it's not affecting the other guys, that is exactly what a healthy market looks like. So all the bears, they think like, oh, because everyone ran into semiconductors last quarter, it should automatically mean the S&P 500 should go down to 700, right? Or 7,000. S&P 500. The SPY is 700. That's what it is. That's what people should be thinking right now. They're thinking like, oh, everybody is concentrated in semiconductors. It should be easier to crash the S&P 500. But so far, every time the Nasdaq goes down 1 to 2%, the S&P 500 kind of goes like, whatever. That's the opposite of what everything's been telling us so far. We've been lucky, maybe. I don't know. So far, we've been good. This is healthy, actually. This is very healthy. So that's why I'm kind of like going like, well, Korea better do something to make it crash. If it doesn't, then why should I be bearish? The money's just going to go right back to semiconductors later on in the month then. If we're just rotating the money out, any of the excess froth is being put in other sectors normally, then why should I be worried? I don't know. Should I be bearish? I mean, I'm not at the point where I'm gonna have to go Michael Burry, the sky is falling level yet. I just don't see it. Because the way it's been acting so far is like every time is 1% for NASDAQ 100 in the morning before the market opened. The S&P 500 is like 0.2. That's not what you want to see if you're a bear. Okay? I don't know what to say. I can't see nothing wrong yet. Okay, the decline followed a sell-off in Seoul, where Samsung shares tumbled as much as 10%, dragging down the South Korea's memory chip makers and Kospi index after results that topped analyst estimates but fell short of elevated buy-side expectations. The disappointment reverberated in U.S. pre-market trading, with Micron, SanDisk, and other semiconductor shares falling as investors reassessed expectations for companies tied to artificial intelligence spending boom. The weakness comes as SpaceX joins the NASDAQ 100. So here, that's the problem. Was it because SpaceX got added to the NASDAQ 100? Was it because the semiconductors were going down as SpaceX was being added? I have no clue what's going on, dude. Okay. There's a lot of activity here with the new quarter. Everybody's adding, subtracting shares from this and that. I can't even tell. Right? Was it SpaceX that caused it? Was Samsung caused it? I don't know. Was all of it combined that caused it? Maybe. Okay. So a move expected to prompt portfolio, but rebalancing across passive and active funds. The aerospace and satellite company also received a wave of bullish analyst initiations after the expiration of post-IPO quiet period. Well, that didn't help. That didn't help today. 6 banks, including Morgan Stanley and Goldman Sachs, assigning buy equivalent ratings. Okay, so what's this picture here? All right. So let's see what these idiots put at the target. New Street Research says $165 a share. Goldman Sachs says $205 a share. Morgan Stanley says $300. Arete says $401. Who the hell is Arete? I don't even know who this is. Okay, whatever. Average 12-month price target is $217, implying a 35% upside. Despite Tuesday's pullback, positioning data suggests investors have yet to become excessively exposed to equities. Citi strategists, led by David Chu, said U.S. equity positioning continues to improve, largely driven by short covering in the S&P 500 and a steady increase in fresh long exposure to the Nasdaq 100 and Russell 2000. Neither bullish nor bearish positioning has reached capitulation levels, they said. Oh, really? Goldman Sachs says they also struck a constructive tone heading into earnings season, arguing that capital intensive businesses are poised to outperform companies whose assets are primarily human or digital. Investors remain underpositioned for a world in which infrastructure, manufacturing capacity, and physical assets regain strategic importance. A team led by Goyami Jason wrote, oh my God. All right. Elsewhere in corporate news. Okay, who cares? All right, you don't need to know that. So I don't know. All these guys are just running in and out of this stuff. What do they tell me here? Nothing. Absolutely nothing. We're still sideways. All right, we're still going sideways. Okay, so let's see how much time I got. Can I play? Can I play the video now? Let's see if I can got time, and then I'll come back tonight. Okay, yeah, I got plenty of time. Okay, I got some time. I can get some 30 something more minutes here. So I'm gonna look at this DeMark stuff, and I got some stocks to look at. So I have all these risky stocks. So I'm gonna look at each one, okay, one by one. All right, come on. Let's see. Let's see. Okay, so this is Axon. This is not part of the thing I was gonna look at, but I might as well look at it for you. Let's look at Axon. Let's look at daily. Looks like we hit our target. Today is the 9th count. So I guess we're going sideways from here. So good. Pay attention to this stock, though. I may recommend this sometime down the line. Maybe very soon. Who knows? I'm thinking like I would rather wait until October to look at these things more seriously. This is probably a good bottom, right? You got like on the weekly here, you got the 5 count already done. You see the 13 on that combo count? So once you hit that 13, it went sideways, right? So that was a serious 13 because you had the C5 next to it. You got the C5, you got the 13. Now we're breaking back above this level target here, 531. The next one is 780 that you got to hit. But there you go, 5 ABC completed. You have 1. It's probably going to pull back to a 2. That's where I would just be looking to buy. Okay. So we're going to have to be looking for this stuff here. Let me look at Palantir before we leave. How's Palantir? Anything obvious? No, it just made a 4 count here. Okay, so it should have a good target, right? Target for Palantir, if it actually goes up in strength again, is 326. So 326 will be the next for Palantir. So if you did a trade for Palantir, good for you. You got 30%. But if you're looking for a long term, maybe this is the bottom. I don't know. If it's not the bottom, then the next one will be $70. There'll be a better place to buy it. 60 to 70. That's still like the absolute worst case scenario will be it revisits that 70, 60 to 70 area. Okay, let's look through this crap list here. Let's look at AOI. AOI. All right, AOI. You see that? Look at that 13. 13 there went sideways, right? C5, 13. Yeah. Okay. It's going to take a while. It was down 7.26%. I'm not sure about the earnings day. I usually think the optical earnings take about a month after most of the mainline earnings. So probably sometime in August, you'll get some earnings on AOI. So this thing could go down, down, down. So if the AI semiconductor stocks keep wanting to go down into next week, you'll get a better chance to buy it. All right, right now. So if this thing does a 1, 2, 3, 4, 5, it get close to 9 count, right? I would say, like, if you want to trade, I would be watching this $80 level here. Okay, that's where I would be watching this thing. All right. Let's see the daily. See the daily. $80, $96 target. Okay, that's where it is. I don't know. If it's worst case will be $40. Uh, I don't know. It could go there, right? Don't be surprised. But if you could get in and you want to trade it, you get it as cheap as possible. If the AI stuff keeps going down, the next target will be like this 329. So going from like 50 to 60 back to 329, that's a real good trade. Okay, this is very volatile stock, very risky. I'm just giving you the riskiest stocks of all time just in case you wanted to gamble, because this is where you want to be to gamble. These type of stocks right here. Next one, Air. We talked about this enough, okay? Look at the target here. We could go down to 35. All right, that will be where we are. We see the C5 over here. You see the 13. Again, we went sideways and now we broke down and we're going lower. So if AI really is out of favor after Samsung and this thing wants to go lower, you got a shot at trying to get in at these levels, right? I was saying like $40, 55, something like that. Maybe even 35 if we go down here. So that will be a good entry. So let's look at the weekly for this guy. Let's see. Air. Let's see. What's the weekly? Yeah, you got a ways to go. You got 13 on the weekly. This thing could go down to 21 if it dares to, right? Okay. So it depends on how bad people want it to move. I think if people really want to pop this bubble, then that's where you're looking for a target, but maybe not. Maybe you won't get that high. Or that low, I mean. A-Lab, another one that got added to the NASDAQ 100. Maybe this is the reason the NASDAQ 100 is going down. They added all these risky stocks like A-Lab. Okay, it already hit its target, right? We already hit our target right here, 396. It's right now at 382. We see a 13 count already start. Looks like at the very least, it's probably going to go sideways for 9 bars. So usually when I see this 13 on a weekly basis, I usually see like about 9 bars. So you could see like a 9 bar waiting period for this thing. 9 weeks from July, well, that's like a quarter. Okay, you probably going to wait until October, right? Before you see this thing move again. Maybe that's what's going to happen. So maybe no trade over here. Maybe there's nothing to do over here. I don't know. Let's look at the daily. We still haven't had a 4 yet. There's no 4 on the D wave. I see a 1-2 starting here. If we break through 330, then we're onwards to 200. All right, that's what I see there. All right, ALMU. This one IPO'd or some crap recently. I don't know. Okay, so it started at 2023. Not much history. Okay, we see it's going down to what is that? 45 from 16. That's a potential there. Okay, let's see what the weekly says. 45 on the weekly as well. So both the weekly and daily agree that 45 is your target. Now the question is it going to wrap itself up here? Are we just going to keep going down every week until like $10 or $5? I don't know. I don't think so. So ALMU, maybe if you want to take a shot at this at these low levels, the chance of it going to 45, it's there, right? You can look at it like a huge range. This thing is a range since 2025 from April. So if you get a good price at around $10, and it has a potential of going up to 45. The risk reward looks really good. All right, AXTI. We talked about this many times. It failed to get to 230. All right, it got like what, around 140. Okay, so it lost its chance to get to a 230, I guess. Here, that depends on if this thing wraps up here. We got 6 on the count on the weekly AXTI. 3 more weeks, maybe until earnings. We'll see if this thing completes its 9, and then you could buy it at $40, and you could retry and see if it gets up to 200 again. All right. So that's what we see here. Let's look at the daily. What we got for the daily. Daily next target is 34. 34 if it keeps on going down. If it doesn't keep on going down, then yeah, it should try to move back up. We got a C3 here. ABC 1, 2, 3, 4, 5. ABC. We got the 13. You see it's going sideways. That's characteristic of a lot of the stocks that are happening right now. And now they're just starting to break down on this Samsung stuff. So if this thing continues into next week, again, you have a shot. If I can get at a good price and you want to trade, yeah, go for it. All right, band. We talked about this a lot already. So $70, that's the target here. The next after $70 is 117. Okay, 117. That's the daily chart. Now, see what the weekly says. The weekly says we already hit our target at 41 already, well over that target. We have a 3 count. If this weekly starts hitting a 13, it's over. Right? So it's not much. It just needs 2 more good weeks and it'll hit a 13. You'll start seeing a 13 pop up. So it better, during that time, it better get to like that 117 whatever target we just saw. So that's it. After that, we're done. Maybe this will just do a 1, 2, 3, 4, 5, 6, 7, 8, 9 on the week. I don't know. That's hard to see. That's really hard to see. What's Cerberus? Cerberus. This one just had an IPO, very new. Look at that. It has no data for the weekly. Look at the daily. No data here. I don't know. We haven't at the downside, so well, maybe if it goes down to like $100, maybe that's when you start thinking about it. I have no idea what this company does. Okay, it's just Cerberus AI or whatever. Okay, Credo. All right, it already hit its target, right? We have 287. That was the target. We hit it. We got a C3 here. Maybe it'll return to 171. I don't know. It has 2 more to get to a 13 on the daily. See what's up with the weekly targets. Any weekly targets? Nope. Nope. We got a 5 count here. 7. No, nothing clear. Nothing really clear on this. So no, nothing. No idea what this one will do. Let's see if it has a monthly. I don't think it has monthly. This thing is pretty new, right? Monthly. Yeah, we got had that 13 count in October. So if it has a hard time to break 258, don't expect much from it. All right. So this one's too fresh. It's too fresh. Okay, next one, Hillian. Okay, on the monthly, we're not going to look at the monthly. Let's look at the weekly. All right, what's the weekly Hillian? 13. Right at the 13, we crashed. Okay. And 1, 2, 3. Okay, so no, we got some time to think about this one. Yeah. So we got this. Let's look at the daily. We got 13, 13, 3C5, A. Okay. So this one, we got some time to think about, I think. All right. Okay, I'll keep paying attention to this one. All right. This one could be really tradable. Like, so for any of you degenerates, this one's probably pretty good. I don't know. We'll have to see. INDO. No, this is the wrong one. This is not the right. Okay, I missed. Okay, I gotta delete this. This is not right. INDO is not right. Let me get rid of this. Edit. That's not right. That's not right. I'm not talking about the Indonesia Energy Corporation. That is a meme stock though. INDO used to be a meme stock. Let me see. I think it's INOD. I think that's what I messed up. INOD. Okay. Yeah, this one. This one is the one I wanted. Okay, good. Okay, INOD. Sorry. We're not talking about Indonesia. All right. What's this? We got a new target here. 177. Okay. All right. This one has a weird little gap here. We've been dancing at the bottom of it. All right. All right. Could be something here for you traders. All right. All right. So the next 2 weeks, you might want to buy this. I think I forgot what was this? AI stock? Semiconductor stock? I don't remember. But you see the C5 13, we get stuck here, we're going down. We got some kind of level at 58. Watch 58 then. Okay? There we go. Lemonade is a AI driven insurance company. So they don't have agents, they have AI. I started. I looked at the stock way back when it first had its SPAC or IPO or whatever. 2020. This was one of those 2020 2021 SPAC IPO pump and dumps, right? You could see here it was like 55. Let's see. What was it? $50? Yeah, probably around $50. It got as high as 155 before dumping. And then it fell because of interest rates. You see here 2022 to 2024, we got there, we got stuck. And now we've hit our target in late 2025 at 78. So I started thinking like, oh, maybe this thing is starting to look good again. I don't know. It's not really that special, right? Because if you did Palantir between 2023, 2024 to now, it matches that. So a lot of these software companies like Lemonade, it is a software company, but if they want to do this AI gimmick with insurance, this thing might actually do better than some of the other ones. Okay. So we got 13 back in December and we're in June. Are we ready to break it or not right here? I'm thinking like it's going to touch 100, somewhere close to 100, maybe 90 something, right? And then it'll return, it'll go back. So maybe 4 more weeks of this goofing off here, and then it'll go back down. We're gonna retest some kind of like 70 to 60 area, I'm guessing, and then we can start moving up again. So I would pay attention. I would put this on your list. I don't know if I would trade it right now, but there are a lot of other companies that do look good, like D Dog. We talked about D Dog, and then there was another one. Oh man, D Dog and Snow. Snow was looking good. There's a bunch of other ones that are starting to look better. App Lovin', yeah, they're starting to look good. So you see this C5 13, we got stuck. So yeah, yeah. Do you want this guy or not? The software is so hard, man. It's like it looks like it's about to improve. Then it just starts sucking ass, and then it looks like it's about to improve. And it's like, do you really trust it again? Oh, so D Dog, same problem. Then we have a Snow database company, essentially a database company. Yeah, see, look, very similar, right? Look at that. It's like, okay, are we gonna break 306 or not? We're at 262. So Lemonade, it kind of like looks like that to me. I'm just not sure. Like you could say, like, oh yeah, sure, just buy it. Maybe on the off chance it get to 400 and you could sell over here, right? There's a lot of these types of stocks. All right, MRAM. This thing got pumped by Reddit. Reddit saw RAM in its name and said, like, oh, it's a memory stock. Let's just buy it. Well, that's all gone now. Went up, went back down. It was $50 at one point. Now it's back at 17. Okay, so if it gets to 12, do you want to buy it? That's the question, right? Is this something you want to trade? So I'm looking at the most degenerate of stocks here. It's possible. We got the top here at C5. Could have been a 13, failed. We're pulling back 6, so 3 more weeks we could get a 9. If this thing gets back to like $8, $5, whatever, yeah, maybe you want to get into this game for October. Probably nothing now though. I don't see anything happening now. I think the chart looks too weak now. This thing yeah, I don't know. This thing is like, ugh, what is this? Yeah, too ugly. This is too ugly. Okay, NVTS. Was this one of them that got added to the Nasdaq 100? I don't think so. I don't think this thing got it. 13. We got C5 here. We got 9 completed. $8.57. That's where it should be projected to go if it keeps on dropping. If this thing stops, though, if this thing makes a 13, like let's say 6, 7, 8, 9, 10, 11, 12, 13. So maybe in 2 weeks, if the semiconductors keep going down, this thing follows it um, somewhere around $10. Okay, maybe I'll be interested. Okay, in trading this. Okay, Poet. Same issue here, similar one. Poet NVTS, similar looking problem. Okay, $5, whatever. Yeah, similar problem. Let me look at the weekly. I forgot to look at the weekly for these. Let's see, weekly. Okay, sideways. NVTS. Yeah, probably gonna go sideways. Both of these are probably gonna go sideways. Shaz. This one's too new. Okay, this one's too new. Can't even look at the weekly. What is it? Man, the target is 287. It's too fresh. Man, this thing is too fresh. What the hell is this? No. Uh, I think yeah, there's not enough information here. I can't give you a freaking idea. SpaceX definitely will be too new. We can't even look at the daily. What we gotta look here? Oh man, I guess I can look at the 78-minute chart. 78-minute chart. Let's see. 9 count completed. Went back down, broke down here. 2 more days. All right. Makes a 9. So in 2 days, let's see if it makes a 9. If this thing makes a 9 on the 78-minute chart, the next target is 188. Okay? 188. All right. Tempest AI. Tempest AI, Nancy Pelosi's former favorite. Actually, Nancy Pelosi's husband crashed his car again. Either he made another DUI after drinking in the wine country or what, I don't know. But he did it again. He already had a DUI in 2022. He did it again. Great. All right. Let's see here. Tempest AI. So yeah, whatever Nancy Pelosi picks is basically her husband's account. So that's where it is. So, and I'm guessing that these people don't even pick their stocks by themselves. I'm assuming they have a whole advisory team set up where whatever Nancy gives to them to figure out, they can figure out. So any insider information, you can bet that they'll figure this. Tempest AI, she used to own this. I don't know if she bought back, but you see the 213s here, 78 minutes. So for the short term, it looks like we're going sideways. So you could see 78 minutes says that. Well, what does the daily say? Okay, similar thing. says we're probably going to go sideways. We just completed a 9 probably today, right? 68. So nothing that tells me I'm in a hurry to look at this, but we completed up move. Let's look at the weekly. This is more interesting, right? So if you think Tempest AI will go up into next year, then your target will be for the weekly 50 from here, right? And we're at $60 right now. So let's say we go sideways to down. Let's say we go a few more weeks, we just keep going sideways, and then into October we go back down. Would you buy it? Would you buy it then? Would you buy it at $50? If you buy at $50, it could go up 3 times to 150, right? Maybe that's where you want to buy it. Okay, Teradyne. Oh, this is not good. Okay, so we got this here. We have a 13 already completed at 261 on the combo. So let me look at the sequential. Does the sequential add anything to me? Okay, sequential says 359. We have a range 261, 359, 261, 359. That's our range right now. So is this complete? Are we going back to 261 and can you buy it at 261? That's your question, right? Okay, Ichimoku Cloud. Okay, we got far ways to go on Ichimoku on that. So let's look at the daily. Oh, my bad. I didn't want to look at Korea. Come on, go back there. Look at the daily. Okay. All right. So for the daily, we're already at the point where we hit the 347. So we got C5, 13. We got this. Okay, next level would be probably somewhere down at 290. See if we hit that. All right, I'll pay attention to this one. I mean, this is like my long-term favorite. All right, I'm not looking to buy more. Okay, it's just like, okay, you buy it at these lows here, it's good, right? It's kind of like if you bought it last April in 2025, you don't really care, right? This is kind of one of those stocks I was talking about. It's like, do you care about earnings or not? If you bought it early enough, you don't really care. So for this point, at this point, when you see like C5, you see the 13, right? Same thing, 13 here. Yep. So this is a significant level that it has to break. So if you're looking to buy this type of stock, like let's say you missed out on last year buying it in April, right? This is one of my favorite stocks, honestly, Teradyne. So outside of air, this is a lot better than air in my opinion. So air is kind of like more for the riskier flavor. This is volatile, but has a better long-term, chart. Let's just put it that way. I don't know about fundamentals. I don't really care too much about them right now. We'll see in a year's time if I really, really want to hold this stock. I doubt it. I'd probably be out by then. So if you missed out, then your next level will be around 300, right? Look at 300. You look at this, you're going like, okay, I'm going to be looking to buy. Let's see if this is a pause. If this is a break in where it is, right? So let me look back. Let's look at the monthly. How about the monthly of this chart? Does it tell me anything different? Does it say like this is a good place to buy on a sideways level? Well, okay, we got a 9 here on the combo. Okay, 13 was already complete way back when. I'll take that away. Combo 13 though. 316, a tested area. And I'll be looking at that. So if you missed out in April of 2025 and you're looking for a place to buy it, look at that 300 area then. That's where you want to be. Okay, last one is Twilio. I only had a Twilio because of like Band. Band and Twilio are similar, right? And Twilio is something I used to play back over here in 2018. One of those stocks I practiced trading with. So yeah, Twilio is one of them. After this move here into 2019, I was like, that's good enough. I'm done. But you can see, like, once it hit its 13 on the combo, look at that. Look at that. We stopped, we went down, we went back up, and we bent back down. And yeah, that 13 level, that 156 levels, kind of like been the midpoint, the average since that first initial move up from the 20s. So I bought it in the 20s. And then it's just like, oh, it pumped up. Good, nice. Wow, whatever. I didn't really understand what it did. I was thinking like eventually Cisco would like buy them out or take them out, but it didn't happen. And now we have Twilio and Band, and Cisco is still over there, right? Not doing anything about it. So we're starting this 1, 2, 3, 4 monthly on a monthly. The target is 384 over here. So let's look back at the weekly. Okay, yeah, we got our 13. We're going sideways. Here we go. We're going sideways. We hit our target, 218, right? So is there a rush to get into this thing? I don't think so. I think you could wait a while. A, B, we've completed a 9 today. Yeah, so I think we're going to be in a range for a while. You could probably hold and wait to see if this thing retests like 160 or lower and go from there in October. So there's no rush here. So some of these stocks, right, we went over, they look good. They look interesting for a trade, for something quick. Some of these stocks look like they're stuck. They're going to be stuck for a while, range bound. And we can just continue on from there. Yeah. I enjoy Skrelly peptide debate. Yeah, that's a good one. The Skrelly peptide debate was really good. All right, let's continue. And I'm going to play the Sienna one for a little while from here. INOD was supposed to be, yeah, that's right. Correct. Yeah, you caught that. Yep. All right. That's good. I went over through all that stock. So you can take a screenshot of this. This will be the one I'll be looking at just for fun. I'm not necessarily going to play these things. All right. But these will be some of the most interesting ones to look at in the coming weeks because they potentially have trading opportunities. Some of them like Twilio, Shaz, I don't know. They don't look as good. They probably better off. We need more data. They're going sideways or whatever, so hard to tell. But some of them have opportunities if you get at the right level. All right? Okay. So I'm just going to play the video now. Let's get to the video. Let's get rid of this. All right. Let's get on with it. So we're going to cover Sienna, the stock, CIEN. All right. So he's going to cover this. And then after that, tomorrow, I guess, well, I don't know. Tonight, I'm going to try to see if I'm going to do AI or peptide coverage. Because I have the Discord VC where he talks more about peptides. So I'm probably not going to get to it today. Because I'm thinking this guy will take a while to get through. All right. So where did we leave off? Somewhere around here.
And they expect back percentage of the percentage of the revenue from a moat. 50-60% of our revenue.
All right, somewhere around here. So I'm gonna start here.
Revenue. 2 customers are 34% of revenue. Revenue is up 40% year over year. Cloud customer revenue is up 70%. Service providers, this would be your telecom. We're going to see that it does quite well with telecom, up 28%. When it does, got to get something called cold sport. So we'll step to it over a number of screens. There is a document up on Gumroad, Understanding Optical Transport, that will go deeper into a little bit of the science behind it, but I try to make these things not too sciencey because, well, I don't actually have a lot of the science myself. But I'll explain this to you in a very accessible way. so that you can understand why what they do has what would be referred to as a moat. They live in something called the transport layer. They move raw bits of data between two physical locations using light across glass fiber. That's fiber optics, and the light is fiber. The fiber itself is so the cost of moving data through fiber is dealt with by what sends it and what receives it. The better the sending equipment, the better the receiving equipment. You can send more and more and more data over a given route of fiber without having to add more fiber, because that's expensive. But to do that, you need equipment at both ends. These are called transponders. As data volumes increase, you can upgrade the equipment or lay more fiber. Obviously, we want to upgrade the equipment. There is Sienna. So when they send information, again, it's on a laser beam. They do it by modulating the wavelength, because light doesn't carry any data at all. But what you can do is modulate the wavelength to represent zeros and ones. So the sending transponder modulates the laser beam. It travels through the fiber optic. It gets to the other end, and it reads all the modulation and converts it back into zeros and ones. But light weakens as it travels. So you either have to amplify or regenerate the signal. Amplifying means you strengthen the light while it is still light. You don't convert it back to data first. Regeneration means you receive the signal, you convert it back to data, and then you relaunch it again. And when we think about a fiber and the signals, a single fiber can carry multiple wavelengths. The C-band can carry up to 80 to 96 different signals. And if you move into the L-band, which is just right beside the C-band, you can add more signals as well. And these things used to have fixed widths. Now they're flexible. So think about a highway lane where you have, different cars that are sitting in different lanes, but maybe you have a wide vehicle that has to take 1.5 lanes. Well, to take 1.5 lanes, you're taking 2 lanes. So you only have 1 lane left to go, but it's really only 1.5 lanes that you're using. You lose half a lane. So when these signals had fixed widths, maybe there was a signal being sent down one of them that didn't quite fill the full lane, but you still lost the rest of the capacity. And maybe there was another one that just was too big for 1 lane, so it used a little bit of the second lane, but then you lose 2 lanes for it. Well, we now have flexible laneways, so that the laneway changes its width based on the size of the signal. So here, Exhibit 2.2 gives you a visual of what that looks like. When you had fixed grid, you had certain sizes in here that you could use. This gray area here, this over here, wasted spectrum. You could see a little bit of waste over here. You could see waste over here because you have these fixed intervals. When it's flexible, the intervals will size to the width that you need, so that you increase something called spectral efficiency, how much data a vendor can send through a given slice of spectrum. So moving from fixed to flexible increases your spectral efficiency. And we're going to see that moving from direct increases it as well. We said that Sienna lives at the transport system. The transport system is made up of a line system and transponders. This is where Sienna is right here. The line system is your amplifiers, multiplexers, and this is equipment that can stay in place regardless of the change or the pace of change in transponder technology. This used to be when I say one system, when a supplier sold something, they would sell the line system and the transponders, but it was proprietary. So if you had a line system from a company like Ciena, you were locked into their transponders. So a lot of sales efforts went into the line system, because once you had that, well, there you go. It's like, I'm going to sell you this printer, and I'm going to do the best I can to give you the printer as cheaply as possible, but man, you're going to pay for the ink. The large operators have pushed for what are called open line systems, none of this proprietary stuff, because it used to be single vendor and you get lock-in. Now the large operators can use transponders from any vendor, even mixing signals on a network. So you can have Ciena on one end of a system and Cisco on another, on the other end, or Nokia on the other end of a system. You can have a transponder that is a closed system for a vendor versus one that is a pluggable on the other end. So it gives the buyers a hell of a lot of power over the vendors. When it was...
All right, that's a pretty important point. That's a pretty important point right there. When I was in the industry, okay, over 10 years ago by now, when you bought a cable, an optical fiber cable from someone, you had the transponders with it. So you bought everything in one go. Everything in one go. You had the optical cable plus the electrical parts at the end. So you were, quote unquote, locked in. If you bought from us, you would be our customer for a while. Because if you had to switch out with another competing compatible, there's no compatibility. So the cable came with the electronic and laser parts with it. You can't switch them out. You know, they're not modular. So if this is what's happening now, then these people are going to start competing left and right with each other at a crazy scale. So there's no monopoly potential here. So watch out. Companies like Ciena, AOI, Lumentum, Coherent. Yeah, they can't just force these customers to be there forever, right? You can't make them contract, like, say, 5 years, 10 years, 20 years. No. At any moment, if you give them a dirty price, they go like, well, I could get a better price somewhere else. Yeah, they could ditch you. So... okay, that's a good point here. I didn't know that. I did not know that they could do this now.
One single vendor for both. The seller had most of the power. So Ciena is now competing in that open environment. Buyers, telecom. These are the big stable guys. They upgrade on slow cycles, but they do pay and offer higher for the newest and highest capacity optics, but it's the fastest growing segment, but it's also the segment with the most competition, the most price pressure, and margins that aren't that great. Okay, let's start walking toward the concept of coherent optics. Reading brightness alone, this is called direct detection, and brightness is a function of amplitude. If you want to move more data, you have to modulate the laser faster. But different modulations, different frequencies travel at different speeds. So the longer it goes, the more you get something called chromatic dispersion, where the data coming in on the other end is not the same in the same order as the data that left, and you can't put them back together again because you only have 1 point.
I'm talking north. I'm talking about like the high speed, like 400 gigabits when I was around, 400 gigabits. And then nowadays it's probably like 600, 800 gigabits. That can't be modular because it's custom. Like you tune your like lasers and your optical to electronics. So the analog mixed signal has to be tuned for that particular fiber because it was so fast. It's so fast. So and this is between data center to data center. So that's what it is. So that's what he's talking about right here. So this is like the bleeding edge. We're not talking about like we're not talking about your home gigabit fiber here. I'm not talking about your I'm not talking about your shitty little I'm talking about the data center AI rack to rack level, like racks communicating to racks. That level of speed here. Let me see what the speed is for rack to rack data center fiber speed. Let's see, 800 gigabits per second now, and 1.6 terabits per second now. Yeah, so we're talking about the bleeding edge. So when I was around, we were doing like custom work for bleeding edge shit. Like this was like pre-AI. You have to remember, this was like they were thinking about like higher speeds just for the social media shit. But I'm assuming they were already thinking like for other applications, right? You have Bitcoin, you know, data transference and other things. Yeah, so people were thinking of there. In my work, MDF mix of Cisco, Juniper. Yeah, Juniper networks. Yeah. I wasn't. Yeah, I didn't talk to anyone at that layer. You know, and you had Arista Networks. Arista Networks, was around. I worked nearby Arista. Yeah, Arista was nearby us. So we had Arista next to us. Like Juniper was like two, 3 blocks. Broadcom was another few blocks away. Yeah, but yeah, we were doing like the research development type stuff. Intel was also looking into it. I don't know why Intel didn't even like try harder. Intel just like started it and then just gave up too. That's why I never understood Intel, man. Intel is like they started the USB, right? But they never capitalized much off of that. And then they did like some work with the high-end lasers, and then they just gave up on that too. So they do have research development money, but they never follow through to the product. And I think it's because of the politics. A lot of stuff gets killed just because of politics, right? If some guy just doesn't like you or something, you have a team that's competing with another team, they might just kill the team just because of politics instead of like looking at the overall benefit of the whole company. But they never do that. Yeah. Most enterprise sites are only around 1 to 2.5 gigabits. Yep. That's right. Correct. Yeah, I don't know too much of that. A lot of people that worked with me were came from that area, that worked on that old school Ethernet and things. Yeah. But the concept is the same. It's just like when you get to the higher levels of speed, it just becomes harder to make robust. You know, it's just like, fuck, this stuff gets way difficult. So I think that's what he's gonna get through here.
In space, you have amplitude. Light has 3 independent properties: amplitude, phase, and polarization. So by adding all 3, chromatic dispersion becomes a known effect and can be calculated. So you can modulate the laser faster, but because you have 2 other points, 2 other characteristics.
So you see where he drew the critical stuff? That's where I was at. I was in the digital signal processing, the A to D, D to A converter type stuff here. The receiver, right there. So that's where I was in. That was my department right there. So where he put in critical. So North says only finance is where they need the silly speeds. I'm guessing it's the high frequency trading, where they have to shove everything next to the stock market. So yeah, I'm sure, but I don't know. There's so many layers to this. I don't even know. At a certain point, you get to some level of specialization. You don't know what the other hand is doing. All right.
You can recalculate what the original signal was. So amplitude is simply just the frequency, the height of the wave, and this will determine the brightness of the light. Phase is just a shift in the timing that a signal leaves, and polarization is like a 90-degree angle. So you can think that you can send light in a wave up and down and up and down and up and down, and you can send another signal that is 90 degrees to this, which instead of up and down would be side to side to side to side. So this would look more like this at 90 degrees and upwards, so you can see it down here. For coherent optics, once you receive it, you have to have the ability to read all three properties at the same time. That's not going to be done easily. You're going to need some kind of DSP, a digital signal processor. This is critical, and this is why when we hear statements that Ciena has a technology lead, Ciena has a moat, it is in this thing right here. Okay, this screen here, we're going to get a little sciencey, but then
Oh my God, he's gonna bring up this stuff now. Okay, guys, here comes Science Day. You guys know what the heck is QPSK? What is this? Oh my God, what does this have to do with? Why does he have to go into this level of detail? Actually, a lot of this stuff is also used in cell phone networks as well. The quadrature amplitude modulation, or whatever they call it. Oh man, HP is doing 800 gigabit switching at the moment. I've moved onto DevOps from networking, so I'm a bit out of it. Yeah, I don't know. There's too many layers. Like nope. Like I went from like CPUs. So I used to work in ARM processing, and then I jumped into high performance computing. Then I jumped into this DSP stuff with that. Because in school, I kind of learned a lot of different subfields. I also did a little biotech and biomedical engineering, just in case I needed to get a job in, something that had to do with MRI, digital signal processing, or CT, right? Scanning. So I was always looking out for jumping around. I never considered myself staying stuck in one area, because I knew at any moment you could be laid off. I always had that mentality. It's like I never had the expectation like my dad did, like to work in the same place forever. That's just like what the previous generation did. So I have no idea like what the newer generations, because I was an older millennial. Okay, so I don't know about the young millennial, the Zoomers. I'm very sympathetic. I think you guys are always going to be jumping around. Like at any moment, it's like you're going to be replaced by AI or this and that, or downsizing, and you're going to have to figure out like how to go somewhere else. And not every job is going to try to know enough that you could pass interview side, so you can pass the interview. So a lot of interviews I got through, right? But then once they drilled me down, they're like, oh, wait a minute, you don't really know this stuff that well, do you? And it's like, no, I don't. So to train, we're done. So I always knew enough to get through the interview stage. And at that point, it's just like me trying to convince them that like I'm a fast learner, whatever, teach me, I'll learn it. And you just have to convince them that, and then you move on. That's how I got into a lot of these jobs. I didn't know shit off the surface level. DSP, it's like, oh, I know filters. Yeah, filters, right? Moved into the Kubernetes field as I saw networking system admin fields were getting fewer or were becoming morphed. Oh, yeah, there then. Yeah, for sure, man. Be flexible. That's the best thing I could say for most people. Don't be stuck into anything. And You gotta be sharp though. You gotta want, if you, you're not gonna be happy. You're really not gonna be happy, because here, when I first got into this stuff, I knew the stuff from a textbook, but what the hell is this? Okay, let's play this.
Bring it back to performance, and hopefully you'll get an idea of why Sienna has a sort of a technological advantage here. We've already talked about three characteristics of light: amplitude, phase, and polarization. Polarization is just a different signal sent at a different angle. So amplitude and phase really gives us everything. And you can send more or less data on each signal. It depends on how you pack the bits. 4 points, 2 bits per symbol, 16 points, 4 bits per symbol. Higher capacity here, 64 bits per symbol, even higher capacity. The higher the capacity, the shorter the distance it can travel over. And this is a function of your technology, how good you are. How far can you send the most data? And it is a function of the distance that you're sending it. So if I drew a line over this, 100 kilometers, this is 500 kilometers, there's 1,000 kilometers, etc. And depending on something at 1,000 kilometers, these are performance frontiers based on different suppliers. You would then move up and you would find the highest as the supplier that you would want. This supplier up here is saying 0.2 terabytes per second.
Sorry guys. Looks like got a little disconnection there. Oh, hold on.
Goal is to produce the highest performance frontier that it can. And this breaks down into three broad market segments. Up to about 300, 400 kilometers. This is the metro and data center connect. So if you have a data center in one area and about 200 kilometers away you have another data center, then you're able to move data at very dense capacity. The 500 roughly to about 2,000, this is where telecom lives. This is between cities, not just between two locations that are a couple hours driving away, but between cities and between countries. And then when you're going between continents, this is submarine or subsea cables between continents. You are moving less and less data as you go further and further distances. So if the goal is to get the frontier up as much as you can, what do you need? Move more and more data over longer and longer distances, which means you need to move from direct detection, meaning just the brightness of light, to coherent optics. And the IP resides in the digital signaling processor of how much you can process at the other end. So the digital signal processor reverses chromatic dispersion and separates the two polarizations. And this is a result of algorithms refined over years. So you don't just show up in this space. Also, the DSP is a frontier semiconductor. That means it is built on a 3 nanometer technology. It's not a legacy size like a 15 or a 20, but built on the latest size, 3 nanometers. Mixed signal, light and logic, hundreds of millions of dollars to design. So again, you're not just showing up. Edge. Sienna builds its D and surrounding optic in-house under the Wave Logic name. So it attempts to get its performance as high as it possibly can. Now, here's the deal that we're going to see shortly. There is a point where good enough is good enough. And a lot of the other competitors are at the point where it's good enough is good enough. Sienna has in-house DSP, but there is also the DSPs that you can buy from other companies, and you can make your own transponder. So,
and you know what? Actually, you could probably don't even need a DSP. You could probably find an all analog solution, and it'll be way cheaper than that. So maybe that's he's alluding to the fact that spend all this money to get the best of the best, but there's trade-off here at some point, right? Isn't good enough just good enough? Who would notice if you dropped a few hundred bits here or there? If you just worked as fast as the other guy for a few seconds, would you even know? Okay, let's see. North says speeds that we are getting to now is crazy. Remember sitting my first CCNA back in the day and learning about T1 and E1 lines. 1.5 megabits per second to 2 megabits. Bad things were back then, that's for sure. And yeah, you're right. Always be learning. If you get into a tech field, you're just gonna have to always be learning. Sorry, I mean, unless you just jump into the managerial level right away, you're always going to have to play the game. This is the tech industry now. Things change very quickly. All right, so okay, we'll continue on from there. So I'm about 1 hour 27 minutes in this presentation, so very nice. We got through a lot. Okay, let me see. Yeah. All right, so about 2 hours 30 minutes. I think that's good. I will come back. Okay, we'll go back to this slide maybe, or we'll just jump to an AI slide. We'll talk about AI. I have peptide stuff we gotta still cover. Oh man, this peptide talk, Korea bubble talk. Still haven't even gotten to some of those articles yet, but hopefully that will tide you over. So let me review certain things before I leave you. Okay, let's put this back up. Blah blah blah. Man, the technology is so far ahead where the point is like not one person can reconstruct everything, right? And there's so much that goes into all parts of the information technology network and layer. Like there's a physical layer, there's like it was mentioned, but at any point, you just kill the right set of humanity, and you won't be able to redo any of this. We'll just go back to the Stone Age, I guess. That's pretty much what it says to me. All right, so let's look at the QQQ. We're right back where we were at this level for the NASDAQ 100 ETF. You see that? We're still here. It's the same type of scenario we got back in Friday, June 26, 2 weeks ago. Now we're just dangling back here. So every time we get up here, we just go back down. So that's where you want to short it. like I said, it's like, okay, look at the semiconductors, right? Same thing. We got this 616 level. Anytime you get above it, anytime you get above it, anytime you get above it, you kind of short it, right? And maybe this is where we just start going back up. We kind of got close to 230. Maybe we'll go down a little bit more tonight into tomorrow. Okay, Korea might have a bad reaction to what happened today. And then tomorrow morning you go below 231. That's where you're like, okay, maybe I'll buy some semiconductors down there. So that's why I gave you a lot of those options today. And let's look at the SPY S&P 500. Very boring. Look at that. We're very close to 750 still on the SPY. So that's about 7,500 on the S&P 500. So this dashed line was like my revised prediction. I said, like, if we're not getting this move because of the semiconductors, then, well, we'll just be kind of dangling around the 750 before we start moving lower. Okay, that's one possibility, right? I was thinking, like, by the time we get to the earnings, we'll start moving down back to 700. But if earnings does well, then perhaps we'll just start doing this. Let me see. How about this? Maybe we'll just not go down to 700. We'll just stop right here, right back here at the bottom of this level, and just bounce back up. Maybe that's what we'll see. But it's just sideways, right? Boring, sideways. What can we do? OSI model. Yep, correct. OSI model. Yep. Most people don't know that, I'm pretty sure, out here. They're like, oh shit, I just turn on my computer and just connect to my Wi-Fi, and it just connect to the Wi-Fi, or then it connect to the fucking cell network. What the hell is this? It says 5G. What is 5G? Bro. I mean, we don't even have physical SIM cards anymore, right? It's a digital SIM card for a lot of people nowadays. It's like, shit. Everything moves so fast, I can't even keep up with it either. I just give up. I just like, what, huh? What does HTTP mean? Well, why do you even call it HTTP anymore? Yeah, dude. I don't even think half the people even know what HTTP stands for, right? Hyper Text Transport Protocol. What? Okay, don't even get me on HTML5, right? Don't even get me on that. All right, guys. I'll see you guys around later tonight, maybe, if I can have the energy. I think there's a lot of stuff to talk about with the peptides and other stuff too. And maybe we'll see what Korea does. Alrighty, good night. See you early morning if you're